Hello, welcome to this week's video blog. I'm Gaetano of MonsterMortgage.ca, and this week we're going to cover the topic of mortgage penalties. In today's day and age, everybody is chasing great rates offered by the big five banks, but one of the things that lurks below that contract are penalty clauses that could be very, very expensive. Just this past week, we experienced a client who was looking for some help because they had to access some funds, being the equity in their home, and they were surprised to see that the mortgage that they took out just a year ago at an interest rate of just 3.19, which isn't that much more than what today's rates are, resulted in a penalty of over $20,000. And when we did review the mortgage statement, discharge statement with the client, we noticed that the way the mortgage penalty is calculated was to the client's disadvantage and was quite unfair in the way it resulted in over $20,000 in penalties. We are very concerned about these calculations with some of the banks, and we encourage all of you new home buyers that are eager to get into that mortgage and get into that house to understand how mortgage penalties are calculated, understand what provisions are in place to calculate your penalties. Banks are starting to be very clever and incorporating the discount that's been offered to you in the penalty calculation. So as much as you may feel you've been a great negotiator with your bank, that that discount that was offered to you could pose to be a thorn in your side if a penalty calculation is ever having to be calculated. So we caution everyone out there, beware those great rates. Underneath them lurks a terrible penalty calculation that could cost you thousands and tens of thousands of dollars in penalties. Thanks for watching, and if you have any questions regarding your mortgage or how your penalties are calculated, please contact MonsterMortgage.ca and we'll be happy to help you out.